If banks don't watch what's coming, they'll be extinct in 10 years. That's not me saying it, that's Eric Trump. Right now, as you're watching this video, there's a parallel financial system quietly running in the background. A system in which you can lend money, borrow cash, and trade assets, all without ever stepping inside a bank. And what if I told you this system has already moved over $1.7 billion this year alone? Yes, I am talking about decentralized finance, or DeFi. In this video, I'll break down exactly how DeFi works and why it could be the thing that could eventually put banks out of business. However, before I begin, please take a moment to like and subscribe. Part 1. What is DeFi? Before we get to DeFi, let's talk about the current banking system we all use right now. It's slow, broken, and expensive. It is called Centralized Finance, or CeFi. In CeFi, sending $100 to your friend isn't as simple as it seems. Your bank passes the payment through one or more intermediary banks, each taking a cut. On top of that, there are messaging and processing fees. So by the time the money reaches your friend, it might be closer to $95 or even less. And if you need a loan, you'll fill out a mountain of forms, wait for approval from someone you've never met. And if you get the money, you'll pay interest rates that mostly make the bank richer. This is the world of centralized finance, a web of big institutions, middlemen, and hidden fees built to benefit the gatekeepers. Now imagine a system where you cut out all those middlemen. Yes, that's DeFi, or decentralized finance. They used blockchain technology, mainly Ethereum, to create apps where you could lend, borrow, trade, or earn interest, all without asking permission from a bank. Instead of banks being the middleman for everything, DeFi uses something called smart contracts. Think of them as robot bankers that live on the blockchain. Basically, they're pieces of code that automatically follow instructions without needing a human to say yes or no. Once programmed, they can't change their mind, get bribed, or make mistakes unless the code itself is broken. Interestingly, DeFi wasn't created by a single company or government. It started around 2017, built by groups of developers and crypto enthusiasts who were fed up with banks, hidden fees, and financial crises we had no control over. In the crypto world, DeFi is like building an entire financial system on code. No paperwork, no gatekeepers, and everything runs 24/7, even on weekends. Right now, there are many big players of DeFi platforms in the market, such as Aave, Compound, MakerDAO, and Uniswap. For example, Sarah in the Philippines earns 5% interest on her savings through Aave instead of her bank's 0.5%. Miguel in Argentina protects his money from inflation by converting pesos to stablecoins on Uniswap. Jake, a college student, uses his crypto as collateral to borrow money for tuition without selling it. Maria in Nigeria sends money to her daughter in London for $3 instead of paying $50 in bank fees. These people aren't tech experts. They're everyday people using DeFi apps on their phones to earn more, save money, and send payments faster than traditional banks allow. Let me blow your mind with some numbers. Part 2. The rise of DeFi. There is approximately $52 billion of value locked in DeFi right now. That's not some small experiment. That's more money than many countries' entire economies. Moreover, the global decentralized finance market size is expected to reach $351.75 billion by 2031, rising at a market growth of 48.9% compound annual growth rate. We're talking about a financial system that's growing at almost 50% per year. Imagine what happens if these numbers double again next year and the year after. Can it replace banks? Let's check it. Part 3. Could DeFi actually kill banks? Now you might think, okay, cool. DeFi is big, but my salary is paid in dollars. Rent, groceries, taxes, all in dollars. So how does DeFi threaten banks? Here's the answer. If enough people move savings and investments into DeFi, banks have less deposit base to lend from. In addition, stablecoins, which are crypto pegged to the dollar, let people use DeFi without leaving the dollar world so they can bypass banks while still spending in dollars. Moreover, businesses and startups might raise funds directly on DeFi platforms, skipping bank loans. Not only this, but international payments and remittances might shift to DeFi, cutting banks out of huge fee income. So, in countries where banks keep collapsing or inflation destroys savings, people might skip banks entirely, like how many skipped landlines and went straight to mobile phones. But if banks disappeared completely, at first, it'd feel like freedom. Like no middlemen, no fees or anything. But overnight, millions of people would lose jobs, businesses could lose critical credit lines, and governments would struggle to steer the economy without banks channeling money. And it wouldn't stop there. Without banks as shock absorbers, financial crises could hit harder. People unfamiliar with DeFi might get left behind. Mortgages and big loans could become harder to get, and the gap between crypto-savvy users and everyone else could widen fast. So while no more banks sounds tempting to some people, the ripple effects could leave everyday people worse off before things get better. Part 4. The truth about decentralized finance. Let's talk about the elephant in the room, the hacks. Hackers are increasingly targeting DeFi platforms, taking advantage of weak code and security flaws. Instead of breaking into banks, they're now exploiting smart contracts to steal millions in crypto. With no central authority or customer support to reverse the damage, once the money's gone, it's gone. For these hackers, DeFi has become the new digital goldmine. But here's what's really scary, and this is where it gets personal. In traditional banking, if someone steals your money, you call the bank, file a report, cry a little, and usually get your money back. The bank has insurance, regulations, and angry government officials who will make their lives miserable until they fix it. In DeFi, if someone steals your crypto, you're basically shouting into the digital void. There's no customer service hotline for, "Help, a robot stole my life savings." There's no insurance. There's no government bailout. There's just you, your empty wallet, and a blockchain that helpfully records your misery forever. The FBI has hundreds of crypto-related investigations ongoing right now. The criminals are having a party, and the party favors are other people's money. And let's accept that DeFi is complicated. Like, really complicated. You know how your grandma struggles with her smartphone? Well, DeFi makes smartphones look like tic-tac-toe. You need to understand private keys, seed phrases, gas fees, liquidity pools, yield farming, and about 50 other concepts that didn't exist 5 years ago. And if you mess up even one tiny thing, like sending your crypto to the wrong address, it's gone forever. No undo button. No, "Are you sure?" pop-up. Just eternal digital sadness. The interfaces are getting better, but they're still built by engineers for engineers. It's like trying to fly a spaceship when you just wanted to drive to the grocery store. This is why mass adoption of DeFi isn't happening yet. It's not that people don't want better financial services. It's that they don't want to get a computer science degree just to send money to their cousin. Now, let's talk about another elephant in the room wearing a suit. Governments. Governments are watching this whole DeFi thing, like parents watching their teenager learn to drive. They're proud, but also absolutely terrified. How do you control the money supply if people are trading magic internet money with robot bankers? How do you collect taxes? How do you prevent money laundering when everything is pseudonymous? That's also a reason why China basically banned DeFi entirely. They said absolutely not to the whole thing. It's like banning the internet because you don't understand it. Russia is also debating whether to follow China's lead. Meanwhile, the United States leads global DeFi adoption with an index score of 1.0, but even American regulators are scrambling to figure out how to regulate something that was specifically designed to avoid regulation. It's like trying to regulate a language that changes every day. By the time you write the rules, the game has completely changed, and everyone's speaking a different dialect. But here's what's really interesting. DeFi activity increased significantly in sub-Saharan Africa, Latin America, and Eastern Europe. The places with the least stable traditional banking systems are adopting DeFi the fastest. That's not a coincidence, it's a warning sign. If DeFi solves its biggest weakness, hacks and complexity, it could become the default financial system, leaving traditional banks as dusty relics of the past. Part 5. Would central banks launch digital money? What if I told you the solution isn't choosing between banks or DeFi? It's mixing them together like some kind of financial smoothie. Here's a new digital currency called CBDCs, central bank digital currencies. It's basically government saying, fine, we'll make our own digital money, but we would control it. Imagine you get the speed and efficiency of DeFi, but with the safety net of government backing. Well, superficially it sounds perfect, but if we dig deeper, there's also a dark side of CBDC. Like CBDCs could also mean governments would see everything you do with your money, every payment, every transfer, in real time. They could even freeze your funds with a click, or block transactions they don't like, because CBDC is a programmable money, and it could actually give governments more control than they've ever had before. If you are curious about how CBDC could be a threat to cash, check out the video linked in the description. For now, let's get back to this video and focus on decentralized finance. Part 6. The reality check. Big banks like JP Morgan are quietly testing DeFi systems. They're not announcing it with fanfare because, honestly, it's kind of embarrassing that teenagers with laptops have built a better financial infrastructure than century-old institutions. But they're learning and adapting. And when banks start learning from DeFi, things get really interesting. Imagine walking into a bank and getting a loan approved in 30 seconds because smart contracts have already verified everything, or sending money internationally for pennies instead of dollars, or earning actual interest on your savings instead of the 0.01% joke banks currently offer. The future isn't about DeFi killing banks, it's about banks becoming less terrible by adopting crypto and DeFi innovations. Look, I'm not here to tell you that DeFi is perfect. It's not. It's risky, complicated, and sometimes feels like the financial equivalent of extreme sports. But here's the thing. The current financial system is also risky, complicated, and expensive. The difference is that we're so used to banks screwing us over that we think it's normal. DeFi is forcing the entire financial industry to ask uncomfortable questions. Why do international transfers take days? Why are interest rates so low? Why do we need so many middlemen? Why does everything cost so much? And above all, who benefits from this complexity? The best way to fix a broken system is to build a completely new one and force the old one to compete. So, will DeFi kill banks? Probably not until 10 years. Will it force them to stop acting like it's still 1995? Absolutely. Banks won't disappear, but they'll have to become a lot less greedy and a lot more useful. And honestly, it's about time. Will you be part of it? That's up to you. But one thing's for sure, the future of money is going to be a lot more interesting than the past. And that's a future worth getting excited about. Did you use a bank or a DeFi platform this month? Let me know in the comments. Thanks for watching.